They've done it. They figured out a way to predict tax outcomes with more than 90% accuracy. I'm going to talk to you about some tax research software that's revolutionized the tax industry by looking at how to predict tax outcomes using various scientific methods. The best way to show you this before going through all the details is just to do a little experiment. I've got my goggles ready, I've got my gloves on, and we've got two elements. We, of course, have our tax element. So this is our tax, right? We're talking about tax. And we've got our artificial intelligence, our AI, which is, think of that like our science. We're going to put these two items together, and we're going to have a revolutionary reaction, a crazy reaction. Look at that. Whoa, woo! Right? That's a crazy reaction, and that's exactly what you're going to see with this tax research software. It's going to revolutionize the industry in terms of predicting tax outcomes. All right, with that, let's go ahead and jump into talking about the software. Now we're able to predict the outcomes of various tax scenarios using special software. That's the general idea of the tax research software called Tax Foresight by Blue Jay Legal. Tax Foresight is a research tool developed by Blue Jay Legal that leverages machine learning to predict with 90% plus accuracy how a court would characterize certain complex tax issues. Now, there's a lot in that statement. We'll come back to this description later on. Let's talk about the history of this product, Tax Foresight, and the company Blue Jay Legal. 3 law professors at the University of Toronto formed Blue Jay Legal. One of those professors is a tax professor named Ben Allery. Ben went to an IBM Watson contest. Have you heard of IBM Watson? Maybe from Jeopardy? IBM has been at the forefront of AI and machine learning. IBM offered 10 universities the opportunity to submit ideas for artificial intelligence application in legal areas. So Ben went to this event and he was one of the judges. There was family law, contract law, doc review, and more general applications in the law. But there was nothing for tax. And he came away thinking, wow, this would be an interesting thing to try in tax. So he, 2 other University of Toronto professors, and a childhood friend, they got together and they worked with IBM on the first product in tax research area that used IBM Watson AI technology. Then they got to a point that IBM wanted to own the IP and they parted ways. They started off with about 6 to 8 employees, but they're much larger now. They also started small with the Canadian market, but they grew to the US market as well. I personally had experience using this software in practice, and I teach the software, so I wanted to share this new technology with you as it's really cool, and we're likely to see this grow in the future. I have their permission to go through the software with you, and they're glad to speak with you. You can go to their website and you can talk to them about more of these applications. Again, this is a real game changer and it's worthy of talking about for many technology updates. So let's talk about the evolution of legal research. This will better help us understand this product because this product is really in the early adopter stages when I'm recording this video of a new era. There are really 3 different eras when it comes to legal research. And when I say eras, I mean huge revolutionary changes. These 3 eras are, in order, the analog era, the digital era, and the computational era. We're currently winding down, at the time of this video, the digital era and moving into the computational era. So let's go in order. And we first have the analog era. This is the 1800s into the 1970s. We're talking about legal research, so this is the first era of hard copy books, journals, reports, loose leaf materials, and other publications. We finally have legal data being documented to help in applying it to the law. But the real challenge is sources are scattered everywhere and there are lots of areas that are incomplete. This makes tax research inefficient and even in some cases ineffective. Let's move on into the second era, the digital era, which started in the 1970s and we're currently winding down at the time of this video, the digital era. This is the first time that we have legal research moving to electronic means, which I know that many of you know how much computers are involved in the internet and other digital measures make things more efficient and effective. The biggest drawback of this era is that it's a real catch-22. As there was more information, it became extremely difficult to keep up with the explanation and regulations and whatnot, keeping up with everything. Finally, we go into the next era, the computational era, and again, we're winding down the time of this video from the digital era to the computational era. This is the first time that we can get real meaning from data using machine learning. In the past, it was all human intelligence. Machine learning is new. While big data and data analytics are harder to find, the idea is that technology has improved so much that we can put a mountainous amount of data into machines, and they can help through statistical and other scientific measures help humans make better decisions. Now let's go and talk more about Tax Foresight. Again, Tax Foresight is a research tool that leverages machine learning to predict with 90% plus accuracy how a court would characterize certain complex tax issues. I want to break down some of those statements, especially the statement about the 90% accuracy, 90% plus I should say. First, we're talking about machine learning. There's a lot that goes into machine learning, AI, robotic processes, and similar. When most people think of robots and the use of robots in tax, they like to think about auto-filling out tax forms like different 1099s, W-4s. You may have seen like Gruntworks and whatnot fill out a tax form. This is the first, or Tax Foresight, I should say, is the first use of robotic processes in tax research. So not just filling out tax forms, but tax research. And when I'm talking about robotic processes, I don't mean like this robotic process. Every day I'm shuffling. Hope you enjoyed that dance. Okay, let's get back to the statement. Let's focus on that 90% plus accuracy. You might be wondering how this number is determined. To understand that, let's talk about the Tax Foresight development process. At a really high level, I'm not going to go onto the theory for too long. Tax Foresight really has two teams, the legal research team and the science team. The research team is made up of many attorneys that have practiced for many years. They read court decisions, secondary authority, and the like, related to all these different topics that they address in their platform. The science team, you have computer scientists and statisticians that focus on computer AI. The process is started when the research team looks for questions of law that they feel Tax Foresight can help tax professionals make better decisions. These are areas of tax law that tend to have lots of factors, like worker classification, debt versus equity, and you're going to see some of the other ones on a list in a bit. After establishing the question of law, the next step is the research team then finds trending factors in these questions of law that they identify from patterns in the cases. The legal research team may start out finding 60 to 70 recurring factors in the cases. These are factors that might influence the judge's decision one way or another. The legal research team then takes these items and feeds these items into the machine learning, and that brings up the next step, processing legal materials. Now the science team and the machine learning part comes into play. The legal materials are processed using more statistics to find confidence intervals and what items are statistically significant in making these decisions. So these 60 to 70 recurring factors in the cases are input into the machines, which is formatted by the science team. The machine then inputs it into more manageable lists of factors, as well as the most important factors using statistics and other big data theory. Without getting too much into the theory and boring you, the machine learning aspect has incredible ability to synthesize volumes of data and drawing meaning from that data. If you think about court opinions, think about how many words are in thousands of court opinions, millions, hundreds of millions of words. The machines can go through these hundreds of millions of words in a matter of a very short period of time, and they can see patterns and develop that data. So the machine sees these patterns, and these are things that humans, it would take a lot longer period of time to figure this out, exponentially longer. And again, they're focusing on trends. And that's how it drives down these factors. Again, the humans, the legal research team, they might get 60 to 70 factors, and the machine learning, they can then isolate maybe 18 to 25 different factors or questions that you have to answer to get an input from them into the machine. Now the next step, apply, test, and refine, is where we get that 90% plus accuracy. As I mentioned earlier, the machine learning is the 90% plus accurate when predicting tax outcomes. A lot of tax practitioners might wonder how this figure is derived. Blue Jay Legal tests their algorithms through multiple methods. And the main one, which is the one easiest for you to understand, is a system called out-of-sample testing. Out-of-sample testing means they train the machine learning algorithms on 70% of the cases of law, and they test the predictions on the remaining 30% that machine algorithms have not been exposed to. So if there are 1,000 cases on a topic, just using a round number 1,000, a lot of these issues have way more than 1,000 cases. They're going to, the machines are going to train and learn, they're going to develop their algorithms on 700 of those 1,000 cases, and the remaining 300 cases, which they have not seen, they're then going to go through and they're going to apply their algorithms using the facts of those 300 cases to give a result, and 90% plus of the time that they will get the correct result of how the judge ruled in that case. So that's the idea of out-of-sample testing. And again, that's just one in determining that 90% plus accuracy. And when you see the software later on, when we go through it together, it'll make more sense of what I mean by they create these algorithms, these factors tests, these questions, and then they use that 30%, the remaining, and then they put that into those questions, those factors, and then they get a result. So you'll see how it fits together. But that's the main that's one of the main ways that they come up with that 90% plus accuracy. Finally, the last step is to monitor and process new rulings. Of course, we know that tax changes regularly in many areas. So it's very important, and we know all about this. The legal research team, they're keeping up with the law and changes in the law, because you're going to see a lot of these different areas of law where there's different classifiers or outcome predictors. You're going to see that we know that it changes frequently. And of course, the machines are also involved as well. I also want to mention that while Tax Foresight states that it says 90% plus accuracy, many of the outcome predictors actually are closer to 95% plus. So it's even more than 90%. They're always working to increase this percentage, though, over time. And as you go into the future, that will, of course, increase. Let's talk about some of the different outcome predictors which identify areas of law. So here are the different coverage areas of U.S. law that have outcome predictors where you can go through the process to see classification. And again, as we go into the future, you're going to see much more issues identified. These are just some of the different coverage areas. Again, you're going to see also that many of these deal with factors tests, like worker classification, which is the one we're going to go through in a few moments, debt versus equity, residency questions, defining a trade or business. These are all things that have, over history, have had factors that the courts have looked at, and there might be different factors that different circuits have used in making decisions. If you want to pause the video and just look at some of the examples of issues, you can go ahead and do that. Before we go into a sample of the software, I want to talk about the usages of the Tax Foresight platform, because you might be wondering, well, since we're at the time of the video, we're going from a new era, we're going from an old era, the digital era, to a new era, computational era. You might be wondering, okay, well, this is early adopter stages. How is this going to be used? And you might be watching this in the future, and you might be thinking you can actually use this more because it's more normal to be using artificial intelligence type software across the board. So as I mentioned, this software, again, in the early adopter stages at the time of this video, and again, there's going to be much more massive changes just out there in general. Tax Foresight is being used by law and accounting firms of all sizes, from big law to solo practitioners. And if you do have interest, make sure you contact them. So as a practitioner, I would say there's really two major ways that this is being used. And there's also another aspect I want to talk about, another issue I want to talk about in a moment. So if you're an experienced tax professional, someone that's been practicing tax for a long period of time, this is a great way to validate instincts. If you've been practicing tax for a while and you know the regular factors of an issue, like worker classification or debt versus equity or defining trade or business, you can kind of use this as a gut check. Like if you're sitting across, or you're at your accounting firm or your law firm, and you have a fellow manager, senior manager, director, shareholder across from you, you've got an issue, you go through the facts, okay, I know these factors, I really think that this worker classification issue, I think that they're considered an independent contractor for federal tax purposes. So you go across the hall, you ask your colleague, and you say, hey, I've got these facts, you explain everything, and they say, yeah, I agree with you, it's worker classification. So it's kind of in that same manner, it helps you, okay? So if you are someone that you have practiced for a long time, you know a specific area of the law, you know, okay, worker classification, I'm very comfortable with the factors, you can use this as a gut check. For newer tax professionals or those not exposed to a certain area of law, Tax Foresight can really help get up to speed in a certain area of law. And I can attest to this because in addition to practicing with this software, I also teach it in my tax research course, and students and the newer generation, they love a more hands-on approach to learning, where they can actually see how in real time how a factor might change and how it changes the percentage, and they love that. And you're going to see that software in a moment. So it's a real dynamic process where the questionnaire, you can change it and see the results. Students, they love that, and new professionals, they love that as well. And if you're a newer professional, you can also use this kind of to give you some guidance or to give you a guide in a way. So again, there's really two major aspects. Whether you're a seasoned tax professional or you're a new tax professional, you can get use from this type of platform. Another thing I want to talk about, and this is something that I think is really important, is the use of artificial intelligence software like this. As we go into the future, not using this might be seen as malpractice. And the example I want to give you, and something you can understand, so you might be wondering, what exactly am I getting at? Think about when you're watching this video, if you are to prepare a tax return by hand, which of course is what they did a long time ago, just by hand, no software, and you messed up stuff, and you go before the IRS and you go to court, and the court finds out you do everything by hand, don't you think the judge might question, hey, this isn't the best process. This is not best practices. The software could have helped you alleviate this issue, figure out this issue, deal with these issues. But because you prepare by hand and you basically neglect to use these tools that almost everybody else uses, right? Virtually everyone else in the profession use, right? This tax preparation software, then it might be viewed as negligence. Well, yes, we are progressing into, this is an early adopter stage at the time of this video, but at some point in the future, the same could be said of artificial intelligence software like this. If you're not using artificial intelligence, because again, we understand that machines, while they ultimately can't make all judgment decisions, they can process information at, again, exponentially faster, time's sake. They can go through information much, much faster than humans can, and that's not a debated point. That is conceded by all parties. And as we go into the future with lots and lots of more data, more cases, more revenue rulings, more private letter rulings out there, well, the machines, they can process that and look for patterns a lot more than humans can. So it could become an issue in the future where if you're not using artificial intelligence software like this, it could be viewed as negligence or malpractice. So keep that in mind. And also keep in mind that while Tax Foresight, at the time of this video, I would say they're the purest form of AI in a tax research platform. Other tax research platforms, they use AI as well, but it's not the same level as this. Now, that being said, in the future, is it likely that they're going to have this a similar approach? Very likely. It might not look exactly the same, but they're going to be implementing more and more of this AI type usage, machine learning type usage in tax research. Now, with all that, you're still wondering about this software. Let's look at our fact pattern, and then we're actually going to navigate through the software. So here's our example. It involves worker classification. That's a specific outcome predictor. I chose this one because it's relatively easier, one of the easier ones regarding, debt versus equity. Some of you might know debt versus equity. Wow, that's a big bear. That's a very difficult issue. Even trade or business sometimes can be quite challenging. Worker classification still can be challenging, but for many of you out there, it's a lot easier to understand. And when I teach it to my tax research or to my tax students, I like to use this example because this is something that we all can understand the facts of, and we're going to be focusing on an Uber driver, okay? That's the main thing. I want to use example that we all have some idea, and again, an Uber driver, a ride-sharing, a gig economy type thing. Is an Uber driver considered an independent contractor or employee for federal tax purposes? Some of you may already know this answer. Others may have an idea. And we're going to go through the analysis, the outcome predictor of worker classification to answer this question. And we're going to do that by looking at the software. Let's go ahead and let's take a look. When going through the software, put on your research hat. Think like Sherlock Holmes. You've got your magnifying glass, got to reason through things. Put yourself in the seat of an Uber vehicle, maybe a past experience you've had. Think about how Uber works. Maybe the Uber driver, maybe you see that the Uber driver is looking at different applications on the phone, looking at different things. We're going to have to go through certain questions and answer these questions. Now, some I'm going to give you the facts, others you got to think through the relationship between Uber and the Uber driver. All right, let's go ahead and jump into it. So here's the Tax Foresight main page. As you can see, we have the different predict outcome areas, different questions of law, and again, we're focusing specifically on worker classification. So we're going to go here to predict outcome. On the next page, you're going to see that the specific worker classification, it says, is a worker an employee or independent contractor for tax purposes? And you can read the questions. This module requires you to complete a short questionnaire about your scenario. So that questionnaire that we're talking about, that is what the machine puts together in this process with these different questions, these different factors. The questions are grouped into 3 different categories: behavioral control, financial control, and the type of relationship. You're going to see all those different question types broken down here on the side, and as we go through, we're going to be looking at those items. Each category encompasses various factors that have been found at common law to be relevant to the question of whether a worker is an employee or independent contractor. So again, it goes to our previous discussion. Once you answer all questions, Blue Jay will compute the likelihood of a worker being classified as an employee or independent contractor by comparing your scenario to previous federal cases going all the way back as far as 1927. So that's pretty outstanding. And again, just like most tax software, there's going to be some CYA language. This module determines the status of a worker at common law. It does not determine whether a worker may, despite classification at a common law, nevertheless be treated as a statutory employees or statutory non-employees by the Internal Revenue Code for FICA or for FUTA or federal income tax withholding. So we're just focusing on specifically employee, independent contractor for general income tax purposes, which most of you out there know that makes a big difference when it comes to tax law. And it gives some more specific guidance in case you need to understand where those differences lie. Let's go ahead and continue on. So this is the background. Every question you're going to have this. It's going to ask for the circuit, and it's going to ask for the business or industry. Because as many of you know, circuits in the tax law, they make a huge difference when you're dealing with the different types of factors. You could have one circuit versus another provide a different result. And we're going to actually see that. Again, this is a dynamic process. So in the end, we're going to see that. And then which of the following best describes the business or industry of the hire? Different industries or businesses, that makes a big difference. Now, where I'm filming this, I'm in the state of Florida. But if you're going through the software and you're in a different state, of course you want to use your circuits. And it actually breaks it down nice for you. And it tells you what the different circuits are. We're here in the 11th circuit. If you're in Florida, Alabama, or Georgia. Again, I'm in Florida, so 11th circuit. So we're going to put that down there, 11th circuit. If you're in a different circuit, again, you would provide a different one. You can actually do I don't know yet. That's an option. If you're dealing with maybe an issue, I mean, in that case, right, you're dealing probably with a tax research class, or maybe the instructor gave you an open fact pattern, they made up a circuit or something like that. Which of the following best describes the business or industry of the hirer? Well, we're an Uber driver, okay? And that deals with trade, transportation, utilities. But you can see some of the other industries or businesses. We're trade, transportation, utilities. Now, I want to go back to this. Again, if you're dealing with an actual real-life fact pattern, you need to have that circuit. It makes a big difference. So while I mentioned earlier about the tax research, I don't know yet, it's extremely important you do have your circuit for determining these consequences. And I'll show you how it could make a difference in the outcome predictor. All right, so now we are here in the behavioral control. You're going to see that as we go in these questions over here on the left, you can always go back and revisit. If you want to change that circuit, you can update. We're still going to keep with the 11th circuit. But on the left here, you have this. One thing to note is that when you're watching this video in the future, some things might be a little bit different, but for the most part, the classifiers, the ideas, they're going to be the same. Okay, 2.1. Who determines how the work product is completed? So whenever you're unsure about answering a question, okay, who determines how the work product is completed, it's extremely important that you take time and you go through the process. Let's go in a little bit more depth on that issue. All right, now that we have our magnifying glass and we're going to be taking an in-depth approach, let's look at more. So this question asks whether the worker can exercise his or her own judgment to complete a task. When a worker is able to do so, it suggests that he or she is an independent contractor. If the worker is hired to produce a report on the company's profitability and is free to determine how to produce such report, select worker. So Tax Foresight, it's actually giving you some examples of where, hey, if you have this, then put worker. If the worker completes the work product in a manner set out by a third party, such as a professional association, without additional requirements from the hirer, select worker. If the worker must abide by the hirer's guidelines or procedures in completing tasks, select hirer. Relevant decisions and articles, you can go here and go in more depth. Case breakdown, this is really helpful. So if you're not sure about a specific question, you can always go here, hire reverse worker. You've got 98 cases that you can look at specifically dealing with where the hirer was for this factor, but ultimately was chosen in the end to be an employee. And then 10 cases where hirer, but ultimately independent contractor. And you've got 168 cases, independent contractor, 60 worker, where it was worker. So basically what they're saying here is that if you select hirer, that factor leads you more to the case that they're an employee. If you select worker, it leads more to the case that you are an independent contractor. So let's go back. Let's go to more and just think about this. The question asks whether the worker can exercise his or her own judgment to complete a task. So think about an Uber driver. Now, if you think about what's going on with Uber, it's a ride-sharing application, right? You got the application on your device, and the driver, they can pick and choose which rides they want to take on. They can also pick and choose which order. They don't have to do a specific order. We're going to get to that in other questions later on. That's going to be an important element. But in that regard, there is an exercise of judgment. You're not told by the hirer, hey, you must pick up this person at this time. That would be more of the hirer setting the details. So one thing, though, that's questionable is if the worker must abide by the hirer's guidelines or procedures in completing tasks, select hire. Now, that being said, Uber driver does have to abide by Uber in that case, but again, there is flexibility with respect to the Uber driver being able to pick and choose which rides he or she wants to actually take on. So for this question, you probably could make arguments for both. We're going to go ahead and we're going to say the worker has the ability to determine how the work product is completed. Let's go on. 2.2, is the worker able to set his or her own schedule or hours of work? That is going to be yes. So if you think about an Uber driver, well, Uber drivers, they can work as much as they want, as little as they want, when they want to, right? They can turn on the app, turn it off. They can do whatever they want. There's lots of flexibility. So this would be yes. They're not required to work a 9-to-5 schedule. If certain days they want to, go to a certain area of town, downtown, and they want to 7 a.m. to 10 a.m. they want to drive around business people to get to their work, then they can do that. Or if they want to go out at night to a nightlife area of town and maybe drive around from 11 p.m. to 3 a.m. and drive around people going out to nightlife, to bars and clubs, they can do that as well. They have the ability to pick their hours. So that's definitely going to be yes, that is yes. And some of these questions, we don't have to click on more. Other ones we do. Does the worker perform the work full time? So we're going to say that our Uber driver, and I know I gave you a very limited fact pattern, very basic set of facts. And the reason I did that is because I don't want to make it too, obviously, you have to memorize every little fact and then come into this. Again, the fact pattern was just an Uber driver. Are they considered an independent contractor or an employee for federal tax purposes? So let's say that let's add some facts. I'm going to give you some facts just to give context. Again, this is just to show you how this software works. Let's just say that our Uber driver, they work over 35 hours. If the worker works 35 hours a week or more, select yes. Let's say they work more than 35 hours. Let's say this is their only source of income. Let's also say they not only do Uber, but they also do Lyft and other ride-sharing programs. So yes, this kind of work they do perform full-time. That could obviously be no as well for if we change the facts. So it could be yes or no, but our specific situation, the answer is yes. 2.4, Who determines where the worker does his or her work? That is going to be the worker. You can go to one location, to another, to a different city, to other. I've actually had students, when I've gone through this before, like in my tax research class, they're actually doing Uber on the side in addition to full-time student in school. They do this on the weekends, and they've told me, during the summers, they've been in other cities and they've been able to do this in other cities, maybe when they're on their internship or whatnot. So the worker is able to determine where the worker does his or her work. 2.5, where does the worker do most of his or her work? Hirer's workplace, worker's home or office, mobile locations. That'd be mobile locations because the worker is driving around doing the work at multiple sites. You might also say, okay, well, it's the worker's office, right? Because the office is the vehicle. Again, questionable. We're just going to put mobile locations, again, just for the sake of this. But it just shows you that some of these things you might have to look in a little bit more depth. And we will in some of these other questions. 2.6, does the worker regularly determine what work product to complete? Yes. Again, we talked earlier in 2.1 about the flexibility the worker has to pick the jobs. Okay, you got on the application, worker pulls up the app. Oh, you've got these different riders are interested in a ride at this time. And they can pick and choose which ones they want. John versus Jane, Jane is over here, John's over here. You can go to either one. So that does give the worker the ability to determine what work product to complete. Different rides. 2.7, does the worker have assistants that the worker hires, supervises, and pays? No. Actually, in an Uber contract, and if you go online, if you're not sure about this, and again, I've had students that are Uber drivers in my class, so they definitely confirm this. The contract is between the driver and Uber. There isn't any delegation of duties or any assistants or any parties like that. 2.8, is the worker expected to render services personally? Yes. Going back to, again, it's the relationship between Uber and the driver, nobody else. Okay, so that's the behavioral control of the first 8 questions. Notice that we answered all of those. Let's go on to the second part of behavioral control. And again, we have all these questions over here on the left. If you ever want to change something, you change your mind. So 3.1, does the hirer set the order or sequence in which the work is to be done? And the answer to that is no. We again talked about how if you have John over here and Jane over here, you can pick either one. And from there, that's obviously going to be a different set of circumstances because maybe John is going to Central Station and Jane is going to this restaurant and they're miles and miles apart, their ultimate locations. Well, based on that, where the Uber driver is located after that specific drop-off, they're going to then go and pick up different people based on where they're located. So the hirer is not setting the sequence or anything like that. The worker is ultimately deciding, and that's ultimately making a difference on what is completed thereafter. So that's no. Okay, 3.2. Is the worker required to submit regular reports to the hirer? So this question, let's go in more depth. Let's get out that magnifying glass. Let's look in more depth. When the worker is required to submit reports to the hirer on a regular basis, it suggests that the hirer is exerting control and the worker may be an employee. This could include a variety of oral or written reports, such as a list of the number of sales calls completed and their outcomes, or reports summarizing the problems found and corrected by a worker involved in a quality control and testing issue. For the purposes of this question, reports that are produced once a month or less often are not considered regular. And again, the question is the worker required to submit regular? Okay, so some of you might be wondering, well, what's the issue here with Uber? Well, Uber is an app, and app is providing data to Uber. It's telling Uber that the driver is providing these rides. It's looking at average reviews given. It's looking at maybe the length of rides, how long it's taking them, maybe what's expected, lots of statistical data like that. Also maybe saying things like tip and the costs and those, different price points and things like that. Okay? So the question is, when the app sends that information to Uber, is that considered a regular report that's being submitted to the hirer? And some of you might be saying, well, yes. Others might be saying, well, maybe not. One question is, we don't know how often this report is generated, okay? For example, it could be something that's generated immediately. It could be something that Uber, it takes once a month to compile the results. So we don't know that. Another thing is, when you go to more, it gives this example is it gives an example of such as a list of the number of sales calls completed and their outcomes. That kind of seems like what Uber does, where Uber is giving the number of rides and their outcomes, maybe average review, what the review was, something like that. And again, we don't know how often though it's produced, the report. So for this question, and you might know the answer. You might be out there an Uber driver and you know the answer. You might know about Uber drivers. You might know the answer. But just to show you how this software works, you're allowed to skip up to 3. At the time of this video, up to 3. We're going to skip this one just because we think it could go both ways or we're not sure. And again, we might not think it's that important of a factor. We're going to see what the confidence interval is later on. So we're going to skip this one. Okay, 3.3. Does the hirer provide the worker with training? No. There's no training provided by Uber. Some of you might be saying, okay, well maybe Uber provides videos or tutorials on using the app, but the main goal, the main thing is driving, and Uber doesn't train the drivers. And in terms of driving or providing customer service, it might again provide some guidance, but doesn't really require the training to be done or actually provide that direct training to the ultimate product or service. 3.4. Does the worker perform the same services for any other party during the relationship? This is another one of these questions that might change for an Uber driver. We said that our Uber driver earlier on, when we went through the first behavioral questions, they do this more than 35 or more hours a week. They do this for multiple ride-sharing apps like Lyft. So we're going to say yes. They do Uber and Lyft. So they do this for other, they do the same services for another party, Lyft, in our situation. Okay, so we've answered all the behavioral control questions here. Notice that we left one blank, right? 3 out of 4. We can continue on. Okay, the next question. These deal with financial control. We're in the financial control area. Who makes the larger investment in the facilities used by the worker? Is it the hirer or the worker? That's going to be the worker, because investment of facilities. The main facility, when you're looking at the facilities, are the vehicles. Think about Uber as a corporation. Think about how many Uber drivers they have, and the Uber driver they have to own or lease their vehicles. So when you consider that in total, the drivers by far have much more investment in their vehicles when you take all those hundreds of thousands or millions of Uber drivers that are providing these services all around the place. 4.2. Who owns most important equipment or tools? Again, that's going to be the worker, because that's the vehicle. 4.3, does the hirer pay for or reimburse the worker's work-related travel expenses or other expenses incurred in the course of performing his or her duties? No, there's no reimbursement by Uber Corporation to the Uber driver. And some of you might even have seen situations where an Uber driver actually loses money. I've seen situations where this happens because maybe the maintenance on their vehicle or gas, those types of things. 4.4, other than the loss of work, is the worker personally at risk of loss? We just talked about this. Yes. Again, maintenance, gas, all these things. And if the cost of the ride doesn't pay for that, or maybe they're driving around looking for work, but they're not getting any jobs because there's just not a lot of jobs or at that time, based on the facts and circumstances, that could be a loss. And that's ultimately, that loss is borne by the worker, by the Uber driver. 4.5, does the worker have the opportunity to profit by his or her own management initiative? This is another one. We're going to jump out and get our magnifying glass. We're going to go to more. So this question ascertains whether the worker can increase his or her own profit by making his or her own management decisions, as opposed to following the hirer's decision. If the only way the worker can make more money is to contribute more working hours when requested by the hirer, the answer is no. If the worker is paid per item, such as, per item made or sold in accordance with the hirer's process, and the only way the worker can make more money is to sell more, the answer is no. On the other hand, if the worker can increase his or her profit by using his or her own improved processes, or then selection of tools, generation of customer leads, the answer is yes. If the worker can increase his or her profit by choosing to work more hours regardless of whether the hirer has requested, then the answer is yes. Okay, so this question, there's a little bit of, you got back and forth. I tend to think the answer is yes. Some of you might be saying, okay, well, the number of rides, right? If it says, if the worker is paid by the amount of items made or sold in accordance with the hirer's process, then the only way to make more is by selling more, then you click no. So you're saying, okay, well, the main way that Uber drivers make money is they provide more rides. Well, you're correct in that regard, but one thing is, look at these. On the other hand, if the worker can increase his or her profit by improved process, selection of materials, generation of customer leads, then yes. So think about an Uber driver. You can increase your customer service, and maybe by increasing customer service, you get more tips, you get more rides or better rides, higher paying customers because you have a higher review. Maybe you get from Uber regular to Uber Black because you've provided great customer service, and because you're also selection of materials and tools, you have a better vehicle, things like that. I mean, that would go towards yes. Also, you can work more hours, and Uber is not requiring you to work more hours, so that last question. So this question kind of goes both ways. I would probably say yes for this one, but some of you might be saying no because, again, ultimately, the way you make more money with Uber is you provide more rides. So for this one, we're going to skip it. We're going to skip this one as well. Again, we're allowed to skip up to 3 at the time of this video. So we're going to skip this question. Let's go ahead and skip that one. Again, it's going to show you on the side that later on you'll see it's skipped. Like we saw in 3.2, we skipped it there. 4.6, whether or not the worker actually performs services for others during the working relationship, does the worker make his or her services available to the market? Yes. Again, this Uber driver, they make themselves available to Lyft, other ride-sharing apps out there. And many of you, when you get into an Uber vehicle, you might see that the driver has a Lyft sign on their vehicle as well. In some of these situations, you'll actually see that the driver, they get real creative. They have 2 different devices, one for Uber, one for Lyft or other ride-sharing companies. And the idea is that they're looking to maximize their profit by being in similar areas so they don't have to drive far to the next job. So yes, they do make themselves available to the market in that regard. You can think of those devices as the market because you've got these riders out there saying, okay, well, I need a ride from here to there and I'll give this amount, and those, it tells the amount and whatnot. 4.7, is the worker guaranteed a regular salary or wage amount for an hourly, weekly, or other period of time? No, that is not a correct statement. And those are the 7 financial control questions. Now we're going on to the type of relationship question. And again, it shows the questions that we've skipped. So all the questions are over here on the left, not done yet. We've got to go to type of relationship. At the time of contracting, how did the parties intend to characterize the relationship? So if you want to go online, you'll see that the Uber Corporation, with its drivers, it classifies this relationship, and this is in the contract as well, as independent contractor. Now, some of you out there might be like, wait. I'm in a state where there's law that requires them to be considered an employer-employee. Like at the time of this video, California, that's a big issue that they're dealing with, is that Uber needs to view their drivers more of an employer-employee for various issues like liability and things like that, or benefits and things like that. Independent contractor is the correct answer here because overall, that is the case for most. But if you're in a state where that's not the case, then you obviously want to change that. 5.2. Does the hirer provide the worker with benefits such as insurance, pension, vacation pay, or sick pay? We just talked about this. No, they don't. I'm in the state of Florida. That's not the case in the state of Florida. 5.3. Is there a continuous relationship between the hirer and worker in terms of duration, consistency? No. Uber can conclude the relationship at any time with the driver. That's in the contract. And also the opposite is true. The driver can just end. They don't have to continue anymore. 5.4. Are the tasks the worker performs a key activity of the hirer's business? Yes. Right? That's the main thing, is providing the transportation across town these riders. 5.5. Does the hirer have the right to dismiss the worker at will? We just saw this. Yes. And 5.6. Does the worker have the right to terminate the working relationship at will? Yes. All right. So now we've gone through everything. You'll see here on the left. Yes, we skipped 2 questions. We'll come back to those questions. I'm going to show you that might make a difference. It might not. Okay. And now we go to our prediction report. You hear that? What is that? Oh, it's an elephant! Oh, yeah! Oh, woo! So I hope you enjoyed that. Not as exciting, though, as seeing the results of our report. Let's go ahead and jump into those results. So 95% plus confidence interval. Remember, we talked about that 90% plus with 90% plus certainty. That's not to say that we're talking about 90% plus with this. We're talking about it's giving a prediction report. This is a confidence interval that it will be considered an independent contractor in that regard, okay? The 90% plus, again, goes back to the way that they do their testing of the machine learning and looking at that, for example, the out-of-sample testing, right? When you have 1,000 cases, those 300 that it puts up, it tests, it goes through and it puts in these facts. So it looks at the facts in those 300 cases that it uses that it has not seen before. It goes through this questionnaire, puts it in, and 90% plus of the time, it gets it correct of how the judge concluded. Okay, so prediction report, 95% plus independent contractor, which most of you out there, you probably thought that would be the case. Now, note that it says the predicted outcome is not accurate as it could be. The reason why is because we skipped questions. It specifically says you've skipped questions. So we can go back to those questions and we can look at those, and we will do that in a moment. It also provides some cases with similar factors. And it tells you which match factors that case has that are similar. So you've gone through and you've you've answered these questions and the machine learning, it's gone through and it's assessed different cases. Again, it's able to go through mountainous amounts of data, and it says that, hey, this case has these similar factors that you put in, but doesn't have these. So for example, in this case, the worker was not full-time. In our case, we did say they were working 35 or more, so that's one difference. And it tells you, okay, that the judge ultimately ruled independent contractor, and it shows you the percentage of factors that are similar and then dissimilar in that case. And there's other cases as well. You can actually go on here, you can actually click on the case, and we can go through and look at the actual case itself, okay? It provides the actual opinion, so if you want to read that opinion, again, remember, cases, the opinions are very long, and again, machine learning, it goes through all these different words. That's one of the things, and it looks for patterns. It uses synonyms. It uses, again, machine learning to understand that the factors are met or not met using a different structure. So those are the cases, okay? Now, again, there's other cases you could go through and look at those. Let's go, and it talks about how do we select cases. Our algorithm calculates the proximity of the facts of your client's case to every other case decided by courts, again, in this area. The indicator on the right highlights how closely the identified cases align to your client's scenario. The closest matches are returned here. Explanation. So again, this is kind of like, think about like a memo. When you write a memo, it's giving you kind of like an explanation, analysis, and talking about the different categories of items. It's going to be kind of generic. So if you're taking me for tax research and you're using this, you need to obviously make it more personal. You can use some of these cases, but you need to apply it more personally to the situation. But this is very helpful because it gives you an idea of kind of how to look through these things. So again, it talks about the type of relationship, the financial control, the behavioral controls, and it looks at those things. And again, it mentions cases, whatnot. How do we arrive at this conclusion? The set of facts you provided looks at the case, the question, the legal question of law, combination machine learning techniques, and those different things. References. So again, it references cases, also references some U.S. code, some IRS publications. Remember, if you're taking my class, never cite an IRS publication because it's not authoritative, but a publication is still very helpful because it provides that aspect of the tax, okay? Also, publications are helpful when you're dealing with filing tax returns as well. So that's helpful. And it also shows you you're in line with the IRS, okay? You're in line with the IRS. So keep that in mind, okay? So those are references. And then do you agree with this result? So maybe you've practiced before and again, you're just going through this. Do you agree with it? Do you not agree with it? Just keep that in mind. Let's say we agree with it and we submit feedback and then we provide them with that. And that also helps them in terms of their development process and whatnot. Now, you also get this report. Let's take a look at this report together. This report is going to have a summarization of the items that we just went through, and it provides kind of like an approach, but also very important because it provides the factors that you've listed going through if you're trying to summarize. So if you are looking at this and you are expecting somebody below you in terms of maybe you're a senior and you're looking for a staff to do this, well, you'd want them to provide this report because especially at the end, you're going to see which factors they selected for the fact pattern. Okay, very, very important. So it gives you, the date. Obviously, date makes a big difference. The issue, confidence interval, and it tells you, okay, well, the result, independent contractor. It tells you predicted outcome not as accurate because of again, we skipped the questions. We're going to go back over that in a moment. Explanation, we saw that earlier. That's the explanation. And again, that's helpful because it gives you kind of like a memo structure. Explanation of data methodology. It talks about how exactly that's measured. That's the first page. Second page, it gives you cases with similar factors. If you want to click on that, it leads you back to Blue Jay Legal. You log in. References, again, it provides references. Again, it tells you how those are determined, identified. And this is the most important thing, at least I think. The last page gives you how you went through each of these questions. It says no answer given for the skip questions, yes, no, which circuit. And again, if you are a supervisor, and you're supervising somebody that's gone through and done this, you can go through and you can quickly identify very quickly whether you agree or disagree with this. And you can go back, obviously, and tell the person below, oh, you need to change this, or you could actually do it yourself if it's saved into the system. But that's really the report that goes with that item. All right, let's go back to our prediction report. Let's take a look at a few things. Remember, we're 95% plus independent contractor. The predicted outcome is not as accurate as it could be. Let's take a look at some of those skipped questions, 3.2, and let's change those and see if it makes a difference. Is the worker required to submit regular reports to hire? Let's just say for this one, yes, they are. We kind of thought about that, and let's just say yes. Let's say if it makes a difference, still 95% plus independent contractor. What about 4.5, does the worker have the opportunity to profit by his or her own management or initiative? Let's say yes to that one. So we're going to unskip it. Yes. See if that makes a difference. So right there, not really a big difference, right? Still 95% plus independent contractor. What about 2.1? That's a question we took a look at. Who determines how the work product is completed? Let's switch that to hirer because there was an issue in there about, okay, the hirer's guidelines. If we change that, watch what happens. We've gone from 95% plus independent contractor to 86% independent contractor. So we're still independent contractor, but it makes a big difference. And that's really important if you're a new tax professional because it shows you that this factor, 2.1, is huge. Critical factor, very, very important factor. Again, machine learning, that's determined that. Okay, let's also change the circuits. So let's say that we're no longer in Florida. Let's say that we are in New York, which is the second circuit. So if we go to New York, right, lots of Uber drivers in New York City, we're going to update that. We were at 86%. Now we're at 85%. So it shows you the circuit makes a difference. And you can kind of go through and you can play with these things to see how, and again, it's dynamic, how it makes a difference. You can change around these items to see what percentage, again, it would the confidence interval, confidence level would result. So I hope you've enjoyed this discussion. It's real interesting, right? It shows you, again, a confidence interval, what the result is. Very, very helpful, very useful. Again, it utilizes machine learning, really does help tax professionals.